Hi, welcome to the Market Alert for Monday, the 14th of March 2022. So in the US, they've already gone forward for the summer. Daylight savings is now in operation as of this last weekend. We've got 2 weeks where the US markets will open an hour earlier in the afternoon. So that will be 1:30 for the Dow instead of 2:30. News from Friday. Bonds, stocks and commodities crushed because of Putin. We'll see about that in just a moment. What have we got here? JP Morgan emerges as largest counterparty to Chinese tycoon's massive nickel short squeeze. What did I say last week? It wasn't any charity or philanthropy on JP Morgan's part to actually assist with bailing out the Chinese brokers, because they're always linked. As I say, no smoke without fire where JP Morgan are concerned. God help us, the death knell, the dollar is here. Metals markets are breaking. Yes, they're breaking on the COMEX, but gosh, the premiums on the physical market is incredible. Lots of going on there. And also this, I'm just going to have to move this down a bit here so that you can see. This is a graph that I put together at the weekend with US inflation, because this headline here said that Biden blames inflation on Putin, big oil and the pandemic. Really? Well, all this grey area here is not Putin. You can see that inflation has gone up 7.5 times. And this is the tiny bit since the war. So again, take no notice of this sort of propaganda that you see here, blaming the inflation. They want the inflation, we've seen that. They want hyperinflation to try and inflate some of the debt away, which is going to fail miserably, I suspect. But there you go. So yeah, don't believe everything you see, or the headlines that the mainstream put out. Graph it if you can, and you'll see that it's complete and utter nonsense. And what else have we got? News this week. Well, the big one this week, obviously, is the Wednesday FOMC. That's the big one. And you'll see there that we're going from a quarter of 1% to 0.5% for US rates. This will be the first and only for me. I can't see how they can continue to raise rates going forward. I think it'll be a one-off and then we'll go back to zero, because it's going to be impossible, absolutely impossible with the hyperinflation. So this is a token gesture, saving face, because otherwise they'll have no credibility if they back down now. But then, of course, they can change tack for next month or the next quarter. Don't see any. I can't just see how they can do that. They're going to go back to the old status quo and continue to print to try and keep it alive as it all falls apart. PPI for tomorrow, and then we'll look at the rest of the week as we go forward. A lot to cover this morning, so let's get on with it and start off with the Dow. I'll just pick this off. Had a few technical issues this morning. Hopefully they won't appear during this recording. So on Friday, we saw a big move up to the 20-bar moving average in the Dow. That came mid-morning as another ceasefire was proposed. We'll see more of that in detail in just a moment. But managing to move higher, but then the market selling off. And we've got this new pattern, haven't we? The futures market is engineered in the morning to bring the markets up, and at lunchtime as the so-called specious news announcements about a ceasefire, shaking hands at the border and all that sort of nonsense. And then in the afternoon, the market sold. And why is this the case? Well, as I keep saying in the market alert, bring the market up, cover the sell orders in the cash market, bring the valuations up, and then they can sell at a higher price for their clients. That's all that's going on at the moment. Same in the afternoon, ramp the market up, get the orders off the books, and get a better price for the clients. So on Friday in the 30-minute chart, you can see the move to the upside there. We had prices moving up sharply, and there you go, you can see it. That was 495 points. Then the selling came in, we were overbought, and the market made its way all the way back 600-700 points by the close. This not a too dissimilar picture in the German DAX. Again, you can see overnight the market trying to move higher. It's incredible, isn't it? War going on, devastation, destruction, and the market's going up. It's just incredible. All last week, the market moving back to the upside. It's not running away, I'll grant you that. and no doubt also pricing in the rate increase on Wednesday night, and then Thursday the market can move lower as well. Then the carnage can start. So the good idea to get the market back up as much as you can. Trading up to 62%, just again shy of the 20-bar moving average. If you look at the 30 minutes for Friday, here's that monster bar where the market just took off and moved up 500 points in the DAX within 30 minutes. It was actually a lot shorter. It was within 5 minutes, which again we'll look at in just a moment. The market then reversed and made its way all the way back. And overnight, you can see the market's being ramped to the upside already. And that's even before we get to the futures opening. This is Friday on the DAX. We were oversold going into the morning session. We had a bit of a sell-off initially. You can see how the market was held at the 200 MA. And once closing back above there, the volume divergence. We weren't oversold on the stochastics, but the momentum was already showing the upside. And that's precisely what happened. We had a bit of a pullback here. Unfortunately, on this here, if you were actually long, where we've got the pullback to the 50-bar moving average, we've got the crossover, oversold, previous day's close, demand, which you can see there as well, a huge demand, and then the market went up. So did they have an insight of this actually coming, that they were going to make this announcement? I don't know. I won't be able to prove that, but it's interesting that we had all of the criteria in place there, and then the market banged to the upside and then drifted its way all the way back by the time we got to early evening. So we saw a massive pullback in this market from this high down to the time here at 5 p.m. of 530 points moving back to the downside. At the moment, it's all BS. It's a way of bringing the market up at mid-morning to allow the Dow to move higher so they can offload for the cash markets when they open at a decent price. So already we can see that the DAX has moved from before we even get to the opening of the futures markets, prices have already moved up 160 points already on the upside, showing a bit of weakness there, and I should imagine there'll be a bit of selling when the futures open. But again, if you go back to the daily chart at the moment, we're trying to get back above that 62% retracement. It's going to be the target, isn't it? That's where prices are heading. In what have we got now? Let's have a quick look at, we'll go to the metals. We can see that silver's looking weak already. They managed to bring the market back on Friday, but we're at the end of the silver quarter. And if you look back at every quarter, you'll see that the silver price is slammed. I suspect that they'll be trying to sell a lot of short paper into the silver market to try and bring prices down. So don't be surprised if you see that sort of action. Forget the war, forget the hyperinflation. It's not about that, it's about protecting the banks. And that's what we'll see. 30-minute chart. On Friday, you saw the market sell off. I spoke about this in the market alert, that they would slam the price. They did. However, the market didn't stay down for long, and it moved back to the upside after the 1 p.m. fix. Of course, they've given back 89% of that already. If we just draw this in from this low to this high, you can see there 78, 89. They've already brought it back. Mission accomplished, so they can keep it in the sideways move within the daily chart there. In the gold market, same thing. A lot of volume in here, though, at the moment. We've got the April contract rolling over in the futures market. The end of this month, we'll see the first notice day and then final trading day mid-October. Very big month for April, for gold during April as well. And then Brent crude sideways at the moment, but not selling off, is it? So again, it's just consolidating, ready for another move to the upside there. Quick look at the currencies. And if I can find them, they're in here somewhere. There we go. We got JPY moving up quite nicely. A bit of a bounce there. Stuck at the 200 MA at the moment. And yeah, it's got to get through this area in order to move higher. And from here, down to here. We've got a 62% retracement that the market will bang its head on if it manages to stay above the 200 MA. There's no US dollar chart today. The March expired on Friday. For some unknown reason, there's a problem with that on the ETX. It's not being updated, so I can't load that at the moment. So I'm assuming that the dollar is moving slightly lower. I'm looking at the other silver chart on the other screen, and that's just moving up slightly, so the dollar must be moving to the downside. In the pound, devaluing at a great rate of knots at the moment as well, down to 130, as you can see, week overnight as well. If we have a look at the 30-minute, there you can see on Friday, moving sharply to the downside as well. Bit of a bounce overnight and then continuing down. Oversold at the moment, so could expect a bit of a bounce in the pound during the morning session. Okay, that's it for this one. Let's see how this week pans out. Very important week. Wednesday, all eyes focused on the Fed. Like I said earlier, for me, I cannot see how they're going to be able to do it. All of those who've been trading for years will remember 2018 when they tried this, and all they're doing really is increasing rates to give them a buffer to actually reduce it, because they know carnage is coming and they're going to have to do whatever they can to save the markets, because that's going to be the deal if they try and continue to raise rates. I may be wrong, but the pattern has been for the last 14 years, that's exactly how they played it. And what's different this time? Apart from the hyperinflation, which they want, they're going to try and keep the markets alive for the 1% elite and all of their chums. Simple as that. Okay, that's it for this one. If there is anything else to report, I will let you know. But as ever, thanks for watching. See you in the